Okay. Assalamu alaikum, everyone. Thank you for joining us for this KFUPM Business School webinar. We are very glad to have with us Dr. Mehmet Soytas, Associate Professor of Economics. He will be talking about the COVID-19 implications for the economy and policy recommendations. Thank you, Dr. Mehmet, for joining us. We look forward to this.
Okay. Hi, everyone. Thank you for joining. Salam alaikum. So I'm trying to kind of make a kind of a summary of the recent government reactions and kind of the economic policies and what their implications will be, and what will be the short-term and long-term implications of this on the economy, around economies around the world. And at the end, I will try to come up with some of the existing policies and some of the policies that are being kind of contemplating by the economists around the world, and how they can actually help kind of get this pandemic-related recession, I will call it, to getting away from it soon. Okay. So starting with some numbers. So I think you see those kind of numbers a lot nowadays on the news and everywhere. The numbers are growing. So in terms of the number of people being affected by the coronavirus is kind of growing a lot from day to day. So this specific example from yesterday, so there are many kind of the databases that you can follow to track the numbers. This is from the Microsoft, I guess. And United States is one of the countries that is being affected most a lot from the spread of the virus. And also in terms of the cases that are in the hospital, and in terms of fatality of the coronavirus as well. Of course, this is a topic related to mostly to epidemiological aspects, and I will not talk about it, obviously. But there are also other growing numbers that I want to mention, and that's going to be the center of this talk today. And what is this? That is basically from United States, but the numbers are not so different all around the world. This basically shows some statistics that labor economists and all macroeconomists follow very closely to understand how healthy is the labor markets. Okay, this is basically the claims, the unemployment insurance claims weekly made by the unemployed people, so who are kind of losing their jobs. Okay, and if you look at this is kind of weekly data starting from 1960s, and you can see that the number is around going down to as low as 100,000, going as up as close to 1 million. But something weird happening at the very end, you can see when we come to this last 2 months. Okay, and I kind of put here a couple of weeks. And you can see that number. So for a labor economist or for a macroeconomist, these numbers are so weird you cannot imagine. So these numbers in the last 2-3 weeks, almost say a month, the applications for these uninsurance claims is topped up to 25 million. So that's a number that we are not ready to understand even. So because that's basically giving a idea about how the unemployment rate will be, because people are applying for these claims because they are unemployed. But we also know that that is pandemic related. People are staying at home, and there are other reasons. So looking at the weekly data here, maybe something. But also, if you kind of look at it in the next slide. Okay, sorry. Yes, here the quarterly data. Okay. And why I'm showing it, because it's basically showing how these unemployment claims behaved over recessions. So these shaded areas here, you can see, is the US recessions, okay? And what is the recession? Recession is a kind of a period of time where the economic activity is kind of dropping. That means there's negative growth over at least 2 consecutive quarters, okay? And we have seen that is kind of the most recent one, and the kind of the most harmful and biggest one we have seen recently, the 2008 Great Recession. And you can see the number of unemployment claims around that time is about 600,000. And here we can only include the first quarter of, obviously, of 2020. And actually, we know that the unemployment insurance claims made only in the last couple of weeks. And you can see the how terrifying this number is even in the first quarter, and these April numbers are not included in that. Okay, so there is going to be something happening. We know there's definitely a recession coming and already came, and how big this recession will be, that will give you an idea about the statistics from the claims over the previous recessions versus a couple of week number coming here with the new applications. Okay. So there are different numbers being pronounced around in the markets. That 37 million. So this is the number that is expected that we can see at the end of the May about the job losses all around the United States, and there are not good news coming from any other market. So the unemployment will be a big issue in many parts of the world. And jobs are critical. So they are critical for many different reasons, but they are critical also from humanitarian perspective. So many people are wage earners. They kind of based on salaries that they get from the supplying their labor. And as a result, they have to kind of satisfy their lives, their families, using that money for their household. Okay, and what we have seen is unemployment actually increased in the United States even from February to March. So this is kind of can be looked to small to many not trained in economics, but a monthly change of this much is extraordinary. So that's basically the unemployment increase from 3.5 to 4.4, but that's already not including the lagging effect of the unemployment claims that we have seen in the previous graph. Okay, what the expectations are? Expectations are probably in the third quarter, around third quarter, the unemployment rate can go from 15% to 30%. So with the I just put the minimum of those here. That's the number that we are ready to actually see in the labor markets. Okay, and there are also other numbers that are kind of alarming, like the manufacturing output falling everywhere and industrial output falling, and that comes in summary to an economy that will struggle for sure. And in terms of how much, where some expects that it's going to be around 30 to 40% decline in the quarterly GDP. And the reflection on the annual GDP drop will be, of course, a combination of how fast we are going to be getting over this pandemic under control. Okay, and of that, I'm going to talk, of course, from an economic perspective, not epidemiological perspective, which is very important actually, which is not very separate from understanding the labor markets at this current stage we have. Okay, so first start with, so what can be done? Okay, this is the case. This is something that nobody wanted, but there's a pandemic that we have to take care of, and the governments are doing, and they are reacting to this. This unprecedented, I will call, an economic shock. And what they do and what are those policies are effective. Let's try to understand those aspects of the economy now. Okay. So what we see is there are several tools that the governments all around the world are using. Okay, these are stimulus packages, and generally or mainly can be put into two categories. The government is kind of directly helping by transfers, and the central banks kind of expanding the available money in the economy. Okay, by monetary expansions. Okay, these are tools actually proved themselves successful in previous recessions that we have seen. Okay, so these are not new things that the governments or the central banks are inventing right now. Okay, but what we also should be careful about, I believe, is these are tools generally we use to kind of deal with demand side shocks. Okay, and this time I'm going to discuss it a little bit. We might actually have, if the pandemic-related economic activity slowdown goes longer than expected, it may actually turn out to be a supply shock as well. Okay, so that can be a little bit terrifying news on top of a demand shock, because so in general economics teaching, at least in the tradition of neoclassical theory, the modern economic theory, we say that the long-term real GDP, that means the amount of goods and services, whatever kind of the exchange rate or the purchasing power parity that you use to measure that, depends on only the real variables in the economy. What it means, it depends on fundamental things like like the interest rate, the real interest rate, right? Which is a kind of a mechanism to clear the market for investment and saving in some sense. Okay, and the other main kind of the variable, real variable that we care a lot, and is the unemployment. Okay, and we spend a lot of time. Lots of macroeconomists spend a lot of time understanding the unemployment dynamics, right? How much of it is kind of structural, how much is kind of temporary, and what it could be the policies to kind of possibly decrease the unemployment in the long run. Okay, and this sometimes called this real variables depends on real things in the economy is called named as classical dichotomy, right? Because that basically saying that yes, you can use money, which is not real, not a real variable, that can be used to kind of tame down the short-run fluctuations, but in the long run, again, you have to go back to fundamentals. Of course, there are different views, most Keynesian views that actually will object that, but at least this is the kind of the common mainstream way of understanding macroeconomic environment, okay? And then, yes, the long run will depend on real things, but in the short run, we have business cycles, right? Fluctuations, okay? And what is a business cycle? That's basically the short run kind of divergence from the economy from the long run path, right? And we know a lot as economists about the business cycles, and we also know, luckily, that they are short-lived. Okay, it's not going to take forever to get rid of that shock. Okay, and one thing that we know, at least theoretically, is the business cycles can kind of come from demand shocks, but all can also come from supply shocks. Okay, but one thing that I want to kind of bring your attention to is we economists almost forgot about the supply shocks in the economy. Okay, because if you look at the last 30 years. And the dynamics of the kind of especially because of the development of the financial markets, all the recessions that we have seen, at least not all, but most, considerably most of them are demand side shocks, okay? And so we almost forgot about the supply shocks. So because of this, actually, when business practitioners actually talk about the business cycles, they almost synonymously kind of refer to demand side shocks as business cycles, but it's not. So we can have supply shocks, and it's more dangerous to have a supply shock. We have seen that actually the world actually saw that in 1970s when what can a supply shock can cause in the global economy. Okay, it's no risk right now, but what I'm trying to tell is if the pandemic related slowdown takes any longer than expected, then it may actually turn out to be a way that includes the supply shocks in the economy as well, and that can actually be very detrimental for the economic activity. Okay. Continuing with the facts and relating them to a little bit of theory, that's what I want to do next. So I think we can see from news that we read from the televisions, the internet, and everywhere that the pandemic creates a lot of difficulties, right? And for the different segments of the population, also for different segments of the economy, right? So both on the consumer side and also on the firm side, okay? And what do governments do? We see, again, I'm going to be sticking with the US example, where there are lots of numbers there, but you can see that any other country is following basically the same kind of economic tools, I would say. For US, what happened is one policy is to make transfers to families, to individuals. That's expanded a lot in terms of the coverage. Why? Because people are sitting at home, they are jobless, and you have to kind of take care of them to keep them at home. Okay, and for one extension was that in US, every family with an annual income less than 75,000 is supported by the government right now. Not only that, these transfers are expanded to previous to unconventional jobs, which are not covered under the social security system, like the Uber drivers. Okay, and of course, and there has been a big chunk of money going to the businesses to keep them alive, right? So the initial stimulus package kind of announced was about $2 trillion. It was actually $2 trillion, but it's expected that there is more to be coming. Okay. And what is then reaction to that? Of course, that is a good start. Okay, so that's definitely something to be done if you want to keep people at home and at the same time they're jobless. you have to transfer money. And if the firms are struggling because no people buying their products and they cannot find people to employ, then you have to support them for a while. Okay, but this is enough, but it's not going to be enough if the going back to normal, whatever it means at this stage, is partially or fully. If it takes longer than expected, then there will be lots of other problems coming in. I will come to that this expected issue later. Okay, but these transfers, what they help for, they help the economy, the individuals in the economy to kind of absorb the initial impact of the labor market shock. Okay, and that's something from a humanitarian perspective. That's something to be done by the government. And for the businesses, yes, we want to keep them alive because at the end of the day, we need those businesses to employ people and produce what we have been producing before. Okay, and then we can, for that, government's kind of trying to find ways to keep them alive as much as possible by transferring them enough amount of funds. Not only that, I will mention there will be tax reliefs, the indirect ways of supporting them as well. Okay, next. Okay, so if we want to summarize this, the main objective of any government right now is to control the pandemic, and that definitely it should be. So it should be what they should be doing right now. And that's not only because of public health reasons, of course, that's the most important one, but that is also because of the economic reasons, okay, which I'm going to mention. Okay, because there are very extreme measures taken, so social distancing that we are kind of repeating a lot, and people are trying to keep that. And there are regional shutdowns, even country-wide shutdowns, curfews, and we are trying to kind of keep people at home and slow down the economic activity, right? So we don't want people to go shopping, to trade. That affects every part of the economy, okay? So let's make some back of the envelope calculations with the US data again. So say roughly with the numbers that I have presented to you in the unemployment benefit applications, we can say from, or infer at least from those numbers, roughly 50% of the labor force right now is not working in the US, okay? That includes job losses, decrease in labor hours, or complete leaves or partial leaves. So 50% sitting at home and not producing anything to the economy, okay? So again, another number roughly for US, there are different estimates, but the labor share of the GDP is roughly between 55 to 60%, okay? So then again, a rough calculation tells us if this 60%, 50% of it is 30. So you can see the GDP from both the expenditure perspective as well, and also from income perspective. So that means 30% of GDP will drop just because people are sitting at home, not being a part of the economic activity, okay? Of course, this is just a direct effect, okay? So just because people are not in the labor market, part of the economic activity, but there are also indirect effects, right? So which will affect the economy's regular transactions, which less people outside means less demand for goods and services supplied for people who actually go and demand them, okay? And I think the more importantly, to people sitting at home and they don't have jobs or kind of uncertainty about jobs, there's a huge increase in uncertainty, okay? And what an uncertainty causes in an economy, so it deserves a kind of a presentation by itself, but less demand in future payment contingent goods and services, okay? And less investment for further economic activity, okay? That's not only kind of something about now, that's something about future, okay? So one thing that the governments probably will be concerned and want to deal with if this pandemic control takes longer than they expected is kind of managing this uncertainty. Because yes, currently we have a damage and we are doing the damage control, kind of do it by kind of increasing the budgets, monetary expansion. We know that are costly. We are going to pay those costs later. But if the economic activity that's going to be helping us when we are going to kind of deal with those costs later, is going to be shaped right now by this uncertainty, that's a trouble. So that's basically something that we should be avoiding for having any effect on future that much. So we know firms are affected as well. So giving some numbers or perspective about that is, in a kind of a recession, on average, 3% roughly of firms bankrupt. Okay, that's a kind of a number that generally economic managements in any country have some control of. Because if they want to increase the kind of the relief, debt reliefs or kind of tax reliefs to those companies, they may actually decrease this number a little bit. Or if they do not do anything, they let this number to increase a little bit. Okay, but this is a kind of on average a number coming out of the previous recessions that we have seen. But with this pandemic, I think this percentage is going to be much larger. So that means if the governments do not do something serious, or the pandemic is not under control in a short period of time, that's going to be the kind of not, it really will be hard to keep it around 3%. That is the kind of on average number from the previous recessions. So this is already a bad news for it by itself, but it has some effects, unintended effects on supply chains, right? So that's something that we want to keep alive among anything right now, okay? Because if some of these firms have some suppliers that are bankrupt, that's going to affect the big main otherwise healthy, I will call, firms in the economy. If they cannot have the raw materials or other kind of services that they need for production, that will be a problem, a real big problem. And actually, economic managements are well aware of this problem, and they're taking the utmost measures to keep the supply chains running and paying attention to that. Okay, now coming to the modeling side. So myself as well started to learn about it, and many economists all around the world now paying attention to this otherwise a model of a very different field of public health, or mathematicians know this model as well, statisticians do too. This is this SIR model for spread of disease. So why we are interested in learning this? Because we cannot think of any economic recovery independent of the recovery, at least some control about the pandemic in the short run. Okay, so that's why we want to have a model in our models, economic models, a mechanism that's going to tell us how the economy will behave under different scenarios of, for instance, spread of infection. Okay, you probably heard this kind of the parameter or the name, sometimes called the R parameter, kind of shows us if one person gets the disease, how many more people that person will actually spread it to. Okay, so for their different views, of course, this is a new virus, but at least the number is kind of getting around the number 3. That means the spread of infection, the R rate for this virus is around 3. If nothing is done, of course, about the spread of the infection. And also another critical parameter that we want to know is the infected population. So where do we start with? So how many of the people that we have, even before taking any preventive measure, is infected by this? And third important parameter is the recovery rate. Okay. So as I said, this is a topic of epidemiological research, but we have to use it because we want to know how it's going to reflect itself in the labor markets. That is actually at the center of this issue, our issue of economic policies. Okay, so then this helps us understanding the size of the economic slowdown by using this SIR model integrated into our economic models, and also gives us possible mechanisms to a recovery path that we can get from these different scenarios with different recovery and infection rates. Okay, and I can summarize that roughly. From the mainstream researchers that I follow, I can see that 3 main mechanisms are coming out when you use this kind of SIR models in your economic models. The first one is introduce lockdown measures to decrease the spread under 1. Okay, so that means each person, even not kind of infects another person. Okay, and that's already being applied, that we can see any government around the world, this way or that way, employed a version of a lockdown measure. Okay, and that's a must, and that's a policy to keep the pandemic under control in the short run. Secondly, that we can see is a mechanism, is develop testing mechanism for identifying the immune labor force. I will come what this means, okay, what this policy is useful and why we may need it, okay. And third, partially open the economic activity in regions or in demographic groups where the disease is under control, okay. Okay, this is also, you can see, partially started to be implemented, especially in Europe. If you are following, I'm sure, the news in the last week, that's what we do nowadays, every one of us, that in Europe, there are kind of, they are starting to implement such a policy where some restaurants, some bars, and some other places are being opened, or at least started to be opened in the coming weeks. Even in some countries announced that they are going to be opening the schools, the secondary schools, in the next couple of weeks. Okay. The policy one, it is easy to implement. Yeah, right. So already being kind of implemented by the governments, that we say, lockdown measures. Sometimes it is for some demographic groups, sometimes for whole population, like curfews, sometimes for regions, but it's being implemented, and it's easy to implement, right? So, but the problem can be, it might be hard to enforce in the long, if the period number of the time period expands to a longer, to a medium run. In the short run, it's relatively easy to implement, okay? And policy two, it's hard to implement, at least with the technology we have right now, okay? Because we know that currently is no such solution, right? At least scientifically, knowing that any individual, even that actually have that coronavirus and have that pandemic over, we don't know that person will get that the virus again or not. Okay, so but that is something that we might need to consider from economic point of view if the pandemic takes longer, because or it comes in second or third waves, because we need some immune people in the economy at least to take care of certain jobs. Okay, and the third policy is again easy to implement, but the secure regions or the demographic groups might not be the economically most valid ones. Okay, so let's come in using this model. So why I told it, the economists use these models, and now what we get as predictions is, with policy one, for instance, when we have the R rate, the infection spread rate starting from 3, as in China, for instance, if we employ it to a real data, we see that our model predicts that it dropped under 1 quickly mid-February. Okay, and we see that what extreme measures have taken to keep that number under 1, and that helps to control the disease. And if you control the disease, you can go back to the economic activity as soon as possible after the disease. Okay, and with the preventive actions still in the agenda, but economic activity will not be slowed down as in a longer period of time. Okay, we have also seen South Korea and Taiwan also control the pandemic with less extreme measures in terms of shutdown, lockdown, but with good management, civic engagement, and tracking system that they employed using the technology. Okay, so it's useful. So it's a policy being used, and it's working if you effectively can use this policy, and it's vital for handling this economic this pandemic in the short run and going back to the economic activity as soon as possible. Okay. Okay, now thinking about the economic and social effects and relating them to the economic measures taken by the governments. So we can actually take them concentrating on 3 possible levels of application. So one is by the central banks in many countries. Is a monetary expansion policy, so giving as much as liquidity in the economy as wanted. The second is support the citizens through transfers to keep them at home and slowing down the economic activity. A third is support the firms either by cutting, delaying taxes, the debts, or to keep them alive as much as possible. And that does also have implications for keeping the supply chain running, right? So that's something that the governments want to achieve to manage the pandemic in a short period of time. So all these policies are about, you can see, to manage the pandemic in a short period of time, and it is actually something useful and should be done. But the issue that I want to bring to your attention is if the pandemic expands to a longer time period, these policies for slowing the economy are no longer sustainable. Okay, so no country, independent how rich, cannot afford to support half of its labor force sitting at home. Okay, even for a year, okay, or 6 months, 7 months. So that something has to be done about going back to normal economic activity. Okay, we see that there are distance working and other kind of ways of dealing with that. I think we are at the very cradle stage of that, but there should be huge improvements in terms of productivity to kind of keep up with the economic activity that we had before the pandemic. Okay, and I will talk about it in terms of policy implications part, but this is not a dream, so that there are things to be done there. Okay, so which actually makes perfect sense, right? Because if there's a pandemic, the first thing should be to kind of keep that under control. As I said, it's from a human or public health perspective, but from an economic perspective as well, because you cannot afford to have it in a longer period of time with the measures that you have taken right now. Okay, so your aim is kind of attacking it with all the tools you have right now to get it under control. Then you can partially or fully go back to your economic activity level in the coming months. Okay, so then going back to the normal functioning economy, if pandemic is not under control in the short run, then what options we are left with? I think we have left with the other two options the economists are coming with, the policy 2 and policy 3. And let's remember what those were. Okay, what was policy 2, remember? So we said that some jobs are, of course, vital for the economy and even for the society, and we need some part of the labor force functioning anyhow, right? So for those jobs, okay. But at the same time, if that spreads in the long run, we don't want people to spread the disease if they are sick, okay, or not being sick if they get it from the other people, but just because they are being out. Okay, so one thing that to deal with this is testing the population for immune individuals. Of course, the immunity means in a scientific way, right? So we have to back it that way. So then there's a name for it, that developing serological test. That's basically a test for the amount of antibodies or proteins in the blood, and telling that these people are kind of immune to this disease, and they can work in the labor force. Okay, and we might need this kind of policies if as I said, if the under control is not successful in the short run. Okay, and in the meantime, so we will have some time to develop a cure, or have some vaccines to be developed, and then this immunity will be expanded to larger share of the labor force or the population. Okay, that's one policy. The other one is about opening the economic activity step by step. So starting with some regions, or starting with some demographic groups, which we see that they're less likely to be affected by, or they're by the pandemic, or these regions are kind of proved to be having not spread the disease that much as the other regions. Okay, so okay, that's definitely something that we already started to see in some countries. But economic activity still will be limited with this, so it doesn't mean that we will have full recovery with this policy. Okay, and especially with the limited mobility across regions. So some regions will be locked down, some will be operating economically. And the second unfortunate correlation comes in is the positive correlation between economic activity and the spread of the virus, right? So that means probably the regions that are where the virus is more affecting, the economic activity on those regions are actually higher. Okay, and that's likely to be the goal to that way. So that basically limit the capacity of this policy that we can employ. Okay, but it will depend, of course, on many different characteristics. So I think you heard this. The Federal Reserve, the Central Bank of United States, announced an unlimited monetary expansion. So that's unlimited is a very, very kind of important word here. So no central bank generally uses this vague or words like this, but that's basically giving the message that the pandemic can create that big an economic activity loss. It ensuring the markets that the monetary expansion will go like a war. So it's going to go as much as possible. So trying to give the kind of confidence to the markets. Okay, and European Central Bank, the other big bank that governs the Eurozone area, kind of announced that it will purchase from the market worth 750 billion in the coming months. Okay, so these are huge money injection into the economy, unprecedented by any measure to previous crisis or recessions or wars even. Okay, so then once the pandemic is under control, so we will probably see over liquidity in the market. So with this monetary expansion, okay, and we're going to see inflated central bank balance sheets with this loss of assets being bought from the market to inject the money, and probably we will see huge debt burdens of countries, because not every country has the capacity to print money to support for this monetary expansion. Some countries will need to kind of go find kind of money from abroad to finance these expenses during the pandemic. Okay, especially countries with a kind of lower kind of international reserves. Okay, so for this, can we deal with those after the pandemic? Of course. So if you open a kind of even an undergrad macroeconomics textbook, we have seen over liquidity, we have seen inflation, inflated central bank balance sheets, we have seen which debt burdens, and there are ways of dealing with. So are those easy? Of course not. So there's a path. So it's not an easy. There's no easy solution, but there are solutions, remedies for controlling for this over liquidity and other issues that can come as a result of current policies. Okay, and yes, after the pandemic is over, or in the coming years, the governments will be dealing with this kind of problems this way or other way. Okay, what about the industries, right? So what some traditional industries might not quickly recover even if the economy goes back to normal. Okay, one thing is the airline travel, right? So that's people really suspicious about that, and given that the pandemic is even under control in the northern hemisphere, so there will be a risk it's going to be increasing in the southern part. So probably airline travel will suffer even after the pandemic is under control for a while. Okay, and also the related activity why the airline travel will be suffering is the conferences, vacation tourism, and partially education tourism as well, right? So that's international students going all over the places. Now we may actually have some limitations on that in the coming years, by individual preference, by restrictions as well. Okay, that's something that we can actually see. And the demand for overseas product, I think that there will be an effect on trade, even if in terms of the goods being bought from other countries, definitely we will see some implications on the trade. Okay. Then, if you want to summarize, the effects can be, and many people talk, not only economists, the effects can be on globalization in general. That means how people see where we have came in terms of globalization at this stage, and how the kind of the reflections will be, how we are going to see it. Okay, on jobs, definitely. So we will see. I'm going to mention that in the next slide a little bit more deeply. Jobs definitely will job losses. We will recover some of them, but there will be kind of fundamental changes also needed to recover after the pandemic. Okay? And the other thing is on the role of governments on the economic activity. So you may see that in classical economics, at least, sees government as a regulator, not being a part of the economy. Other than that, but this pandemic showed that a little bit different view on this, right? So sometimes you might need governments on some other roles other than regulators. So in terms of especially diseases like this, and there are many discussions going on this topic. Actually, there's a kind of a new book. Many of you, I'm sure you know, The Narrow Corridor by Daron Acemoglu from MIT. Basically, kind of emphasizing the role of governments and economic activity from a historical perspective. So looking at how it developed during the last 2 centuries, and especially after the World War II, okay, and about that era. Okay, and healthcare system. So I think that's something that we need to mention is everybody actually saw that healthcare should be thought, including the public health inside of it. Okay, so it's not somewhere that we can rely. Just we have a kind of we have a disease, or we have a kind of some sickness, but it should be thought in a more general sense from a security perspective. I think with the pandemics now, I think becoming a part of our lives in the next century, there should be spare capacities in the healthcare system, which many countries do not have and do not operate that way. Okay. And then finally, I think the importance of expertise and science on public decision making. So that's something already being implemented by many countries. I think with the phrase, it can be seen in government decision making with evidence-based research, right? So that's basically for anything that you want to do, you want to see first an impact analysis for whether it's useful, it's scientific. So the results that I am expecting from this particular policy is reflected in some way using theory and practically data to show it actually will be working, and working for some people more, working for some industries better than the other ones. Okay, so I think that's going to be part of the economic decision making more, also on the other sides of the economy, that's including the public health as well. Okay, can you help me go to the next slide, please? Okay, I promise that I'm going to talk a little bit about the expectations, and as economists, we take expectations very seriously. Okay, so we know that it is one of the, if not the most important factor that can create lots of problems, lots of things in the economy, including the recessions itself. Okay, and there's even a name for it we call self-fulfilling expectations. So that means if there's no economic fundamental going that much bad, or that much wrong, still individuals believing that it's going to be much worse can actually create recessions. We have seen recessions like that in the past. Okay, so therefore handling the macroeconomic problems that are hanging to the post-pandemic era also will require the governments to develop tools to manage the expectations. Okay, so that will include managing the inflation. So that's something that we are expecting to see because of the expansionary monetary policy. So there should be credible plans kind of communicated to the public how the central banks will be dealing with the inflation. So that's is important for decreasing the severity of this recovery after the pandemic. Okay, and there should be commitment to productivity increase, right? So that's definitely one thing that we have to see after the pandemic. So that means I'm going to come in a second. The jobs requires and the think in a way that there is a kind of a risk factor right now, which was not part of the general planning or general productivity. Then there can be productivity losses because of the diseases like this. Okay, just because people are not coming to work, and then that will give an extra kind of a motivation for firms to think about, or the economy in general, think about how to increase productivity. That probably will include big data, artificial intelligence, and also distance kind of working. Okay, and the final one I can think of is diversification of the economy to create more jobs. So that's not only for economies that are already doing that, because even before the pandemic, for different reasons, I think this term is very close to people living in Saudi Arabia with the 2030 vision, but that will be needed for any economy from now on. So that's a good thing that the kingdom started it earlier with diversification of the economy. But when you look at the job losses, yes, after the pandemic, that there will be lost jobs will be gained. Okay, in the existing industries. But evidence shows that if you look at the recessions, this recovery is never 100%. Okay, so, and even much less than 100%, considerably less than 100%. So that means, yes, these people are at home right now because of the pandemic, but when it's over, not all of them will go back and work in their existing jobs. So that means if you have also a growing population, then you have to find a solution to this problem, that you have to find these people new jobs, and that only comes with a way to diversify the economy. Okay, And I forgot to mention about the commitment to productivity increase. That definitely for developing countries a very clear message saying structural reforms. So that's the only way forward, because fundamentally talking about this artificial intelligence and other things, even before that, the developing countries has, for those who hasn't started yet, they have to think about reforms that's going to make the structural reforms in the economy, on the microstructural reforms, available and widespread. Okay, and finally, I think the final message is there will be some take for every individual from this this pandemic, and that individuals in the labor market will be, I think, more resilient in that sense, and that can be spread even to societies, that I can tell. Next slide, please. Okay, let me mention, so I cannot help but put a slide about it, because inequality is at the very heart of me, my research. Some part of my research concentrates on that. Okay. So it's at the very heart of my heart to talk about inequality, because that constitutes some part of my research. And for longer term issues, I think one thing that we have to be taking in the agenda after the pandemic is over is about the inequality. So it was already on rise globally before the pandemic. And given that the economies will shrink for sure, we are in a recession. But yet, suppose a 15% decrease in country A in GDP, that doesn't necessarily translate linearly. So that means that 15% is kind of meaning 50% decrease in each person's income. That's might be bearable for everyone in some. Okay, go to the package store. But this transfers kind of translates non-linear. Let's say for some people it means a 5% loss of their income. For some 50%. Some will lose all. So that means some people will be losing everything. Okay. Therefore, inequality is likely to worsen in the post-pandemic era, and then that gives a kind of a policy implication for governments. Then poor should be supported after the pandemic, and especially policies should target their children. Okay, because again, labor economists document that recessions not only affect in-generation kind of inequality, but also it also affects intergenerational inequality, right? Because it also affects the future of the kids of poor people. Okay, but on the positive side, the pandemic creates an opportunity to find solution to long-lasting problems. Okay, which some of them I will mention, and then I'm going to end my kind of presentation. Can we go to the next slide? For instance, we had the okay, you can hear me.
Yes.
Sure. So, for instance, social security system in UK is developed during Second World War. Okay, it's sometimes called. As I said, the social security system, for instance, came after a kind of a shock that in the Second World War, in United Kingdom, it came with the Beveridge Report. In the United States, it came with the Great Depression of early 1930s. So in those periods, we have seen governments lifted more responsibility in the economy, while at the same time they managed to promote innovation in the market economy. They trusted that. Okay. And then that's kind of some hope coming from this perspective. So the society can actually try to find out more innovative solutions for some problems in the labor market or in general in economies that can actually needed to be solved. Healthcare system should have a spare capacity that we have seen, and reforms can be thought about that. And one thing that I want to also mention, so global warming might be taken more seriously because pandemic has reflected some emotion, I guess, on how once a far threat can quickly become a daily life kind of argument, right? So then on the same is true about the global warming. So that can be something that the international kind of the community can actually pay attention to, okay? Therefore, a possibility in that is it might have a kind of an adverse effect on globalization, but at least in terms of international cooperation on global issues, there's this chance, used in a good way, to spend time on solving those kind of problems together. So we have seen a very good reflection of that in scientific community actually during the pandemic. So independent of their nationality, they worked hard to share all the possible information. They created the genome of the virus in a very short period of time that helped other researchers elsewhere in the world to come up with their own way of dealing with the patients. Okay, I think I better stop here of my presentation. Thank you very much for joining. What is next? Are we going to take questions or?
Thank you so much, Dr. Mehmet. Very informative. Apologies for the issues that came up.
Yeah.
If anyone, let's open it for a couple of questions. If anyone has a question, you could type it in the chat box. Dr. Mehmet, could you read the chat box or do
I'm checking right now. Okay.
So there's the, I guess, a very popular question these days.
Yeah, how much will it take to recover? That's a popular but a hard question. So I think all the effort right now we can see is to control the disease as soon as possible. At least the economic reflection basically shows that, as I presented in the main message from this presentation. There are different numbers about that. I think the disease, even under control, can be under control in many countries in a short period of time. There will be reflections that's going to be affecting the economy in terms of the recovery of the labor market. So people will be partially going to the jobs, back to the jobs. I think that it's going to be going over a year to 2 years. Let's take it to 18 months to 2 years to that the economy will go back. Not the go back to normal is a kind of a difficult word to say here, but actually go back to functioning close to normal, I will say, within a year to 2 years. Let's look at. Okay.
Look at this. A lot of questions coming in. Let's look at, for example, is there anything unique in dealing with this in Saudi Arabia compared to others?
Yeah. So I'm of course following Saudi Arabia closely since I have been here as a professor at KFUPM. Before that, I was in Riyadh working at the KFUPM for a year and a half. Actually, the one thing that I mentioned, if you remember, is about the diversification, right? So going back to normal is actually the main concentration right now, and Saudi Arabia actually will be implementing this kind of measures soon. But with the given numbers, we can see that the situation right now is currently better under control in Saudi Arabia than many other parts of the world. That's at least from the numbers that what we can tell. But at some point, that's going to be in the next quarter, it has to be thinking about going back to normal in terms of economic activity. So, and probably that question involves something about the petroleum in mind, which is something that we cannot think about when we're talking about Saudi Arabia. What I can see is kind of with the current policies about the production cuts, I think that's going to be improving in oil prices. But the bigger issue still remains, right? So whether the oil prices will be or not, independent of the pandemic, they already started the Vision 2030 is actually a kind of a document or a policy that's Saudi Arabia should be following anyhow. So that's independent of the current pandemic or anything else. Okay, and we see that its significance actually increases because now there can be job losses, and then we know that there's a huge expat community working in Saudi Arabia as well. That's going to be something to be need to be dealt with separately. But a plan that for Saudi Arabia definitely kind of advice will be the diversification of the jobs after the pandemic. That's already being implemented in place already. So maybe putting more effort to on implementing that labor market reforms more closely can be a recommendation for Saudi Arabia, at least from my perspective. Yeah.
Thank you. Thank you. That answered a bunch of questions about Saudi. Could pick one or two more.
Okay, I'm checking them. People asking about U.S. elections.
Yeah.
Okay, are the stimulus packages effective in stimulating the economy as a whole? Given the circumstances, people are mostly spending their money on food and housing. Okay, I think it is. So because that's I was trying to describe is this money is actually given to people to spend on food and housing. So because the aim of the government is not trying to recover the economy right now. They are trying to control the pandemic, because if they cannot achieve it, recovering the economy will be a harder task. Okay, and it's a short-term goal. And as I said, it can only be go as at max 4 months to support people and then control the pandemic in the meantime. That's a very good win-win strategy. Okay, but if not, then no, you cannot support people for a year just making them sit at home. So you have to find out a way to partially at least operate the labor markets, okay, and get back people to working. Okay, and given the current situation and this pandemic, this virus that we don't have a clear and good idea. Yes, this money should be given to keep people at home. Okay, and that should be kind of understood from that perspective. But it's not a money to kind of give people to spend on economic activity. The same is true for firms, right? So we are going to need those firms to hire those people when a pandemic is under control. So that's why lots of public money is kind of being spending on firms to keep them alive. And maybe one more question that I can look at. Okay, that's a good question, I guess. So how long will tolerate the consequences of the virus if they going on lockdown? I was trying, that's my perspective, of course, but my take will be not more than 6 months for the reasons I explained. The second part of that question tells, will there be a major economic changes in the world after the end of Corona, like focusing on switching to robotics and systems automation? Absolutely. So I think that's already being happening. So especially in supply chains, we see that. So in US, Amazon and big companies are kind of using a lot of robotics in their supply chains, right? And I think it's going to be reflected in other industries. So we are actually being in a conference right now online. So that's changing our lives. So in an unprecedented way. So we have to kind of spend more time and more thinking, I guess, on the things that we are using right now because of this emergency. But then there's a chance that that's going to be a part of our lives for a longer period of time. Then we have to find out the productive ways of using that, right? Not just for talking or not just for conveying maybe information. These are not unproductive things, but also in terms of using these to make it better. I think that's important, and that includes definitely robotics, system automation in production, and that will also include, I think, artificial intelligence a lot and big data a lot in terms of our talking in the next couple of months. Thank you very much for all of
Thank you so much, Dr. Mehmet. Thank you so much, everyone. Thanks, Mustafa, for helping us and arrange this. We will edit this and upload it, inshallah, to YouTube. Thank you so much.
Thank you very much. Assalamu alaikum.
Stay safe. Assalamu alaikum.